Hello traders, it's your one and only skill coach Tim Legend, and I'm super excited having you all here today on this one. Alright, so in my previous video I made a video teaching you guys the strategy that you can use to trade the boom and crash and make quite a lot of money from the boom and crash market. And one of the confluences that I used on that strategy is the Fibonacci. And I observed that most people were asking me a few questions concerning the Fibonacci, and that is what I want to teach you even much better, how to use the Fibonacci to trade the boom and crash and make money in the forex market. Now, before I proceed on that, you will get to observe, if you watch that previous video on how I use 3 confluences to trade the boom and crash to make money, which I made $1,000 plus, you would observe something, guys. I told you guys that I was expecting price to come very deep down to this last level, and you can see that exactly when it got to this last level, price only went a little bit lower and boom, it continued back to the upside. A strong retracement, of which if you come to the 1 hour time frame, you can see is a strong retracement going back to the upside. Now it means the bulls have gotten power again. All right, so here comes the question: how do I use the Fibonacci to probably predict where this price might likely start falling back to the downside so I can take advantage? And remember, this is not about catching spikes, because this is boom. And if I'm looking forward to using the Fibonacci to catch the end of the retracement to the downside, then I'm talking about grabbing candlesticks. All right, so the question is, how do I use the Fibonacci? For the sake of those who don't know how to use the Fibonacci and who didn't understand clearly how I use the Fibonacci in that previous video, I'm going to teach you here how to use the Fibonacci to make money trading the boom and crash. So right now, what I'm going to do is I'm going to teach you how to use the Fibonacci and show you the illustration, and then I'm going to pause the video and so that we can watch how price will react to whatever I'm going to teach you now in the next few couple of minutes or hours. Okay, so let's get started.
It's Bullish Bay FX Academy with your one and only Tim Legend. Right here we never settle for less. We keep working, producing signals and write videos to help you grow, and we keep making consistent profits with the top recommended broker, Deriv. We keep trading and never settle for less till we get to the top. That's how we roll.
What is actually the Fibonacci? The Fibonacci is a retracement tool that you can always use to identify the end of a retracement. What do I mean by retracement? Now, when price moves in a market structural pattern, which is a lower low, lower high, lower low, lower high, lower low, and lower high, all right, when price moves in that wave to the downside, all right, you identify it to be what? A downtrend. And then when price gives you a lower low, you're expecting what we call a retracement, or is also known as a pullback. The pullback is the lower high. Now, that lower high, you're trying to identify where will this pullback end? Where will this lower high end? Where will this retracement end? If I can identify where the retracement is going to end, I'm going to place myself from there so that I can grab the next opportunity of the next lower low. Because when the market is on a downtrend, the lower lows are usually a long movement than the retracements. For instance, if you get to observe on this downtrend, you will see that from here to here was a very long movement of the bears, but when the bulls moved back up, it was just a small move, and then the next movement of the bears was very long again. So it is anticipated that if this market will continue to move in the bearish market structure, then this retracement here right now should be stopping anytime soon and continue the next long bearish move. But the question is, how do I know where it's going to stop? And that's where Fibonacci comes in. That's why I said Fibonacci is a retracement tool, or you can say Fibonacci is the end of a pullback tool. So this is a Fibonacci, and on the Fibonacci we have different varieties of numbers. Now this numbers is counted from 0 to 100. Now what does this mean? It means 0, which is the starting point of the trend of a particular trend move, to the 100% of that trend move. Now what we expect as traders, or what we always anticipate as traders, or what we always take advantage as traders, is that each move of the market structure should not go beyond 50%. And if it ever goes beyond it, it should at most not go beyond 61.8%. If any price that goes beyond 61.8% is not an assured market for a sell until price gets to 100%, of which I'll also tell you what to do when it gets to that level. When you want to put a Fibonacci for a bearish market, what you want to do is, when you bring out your Fibonacci, you place the Fibonacci on the top and then drag it down to the end of the move. All right? So when you drag it down to the end of the move, you would be able to find out what level is the 50% or the 61.8%. Now, another thing is, there is not just any time you bring out your Fibonacci. You only bring out your Fibonacci when you notice the move has begun. When you observe with your eyes and with your mind that the move has gone beyond 10%, then you can bring out Fibonacci, because not every move is a pullback. Sometimes it's just a mere little move that wants to continue, but sometimes it's the real pullback. So you only wait to see when price has gone beyond 10%, then you can bring out your Fibonacci. So let us take a little illustration between here to here and here and see how it goes. I'll bring out my Fibonacci, and remember I said you're going to place your hand on the top of where the move began. So my hand is on the top right now, and all I'm going to do is to drag it down. Down, down, down. So now that I've just done that, let us observe the game. From here, I drag it straight down. Okay? Why did I drag it straight down to this level? Because this is where this is where it stopped, here. And then this was the pullback. And now let us observe, where did the pullback stop? 61.8%. And that was where the new move began again. Okay? Now, if you get to observe, let me zoom it in again a little. If you get to observe, you would notice that during this pullback here to the upside, before it got to the 61.8%, when it went down, the bull's trying to push up again, and then it stopped at 50% before the real move began. That is to tell you that price always, not always, this is Forex and anything can happen. So not always, but most of the time, price usually respects the 50 and the 61.8% Fibonacci level. That is why Fibonacci is a profitable strategy to use to trade the Forex market. Okay? Please don't mind my voice if my voice is not clear. I actually woke up this morning all right, so, to make this video, because I wouldn't have time if I don't do it right now. So I just hope you guys are hearing me clearly. If you can hear me audibly, just use the comment section and let me know, team, I can hear you. Thank you. A second illustration before we go for a bullish market, all right? Because I remember someone asked me, Tim, you did a Fibonacci for a bearish market, you didn't do for a bullish market. So let us see and observe where will this new move end using a Fibonacci. So I'm going to have to put my hand on the top here and drag it down. So putting my Fibonacci from the top, and I've dragged it down to the end. Now here is the retracement. Where is the retracement currently, guys? I want to know those of you who have watched it to this level. I'm not going to say it. Tell me, where is the retracement level currently? What percentage is this? Okay, so now that we have seen what percentage this market is, the anticipation is that at any time it should start falling, and if anything want to go worse, it should go a little bit and then stop here at 61.8%. and now at that 61.8%, I have my support and resistance level there. That's two confluences, but I'm not teaching about confluence. I'm just teaching you Fibonacci right now. Okay, so at this level right now where price is currently, please use the comment section. I want to start observing most of my viewers, those who are really learning from me, because very soon, I'll begin to do a lot of giveaways, and I would like to start it with most of my top followers. Okay, so on the comment section, I want you to tell me what level is the market price right now. This is just a way I know that most of you watched this video up to this level, and you didn't skip it away. Okay, so now the price is currently at this level. Let us zoom in and see what is happening in the main market. Now you can observe in the 15-minute time frame that exactly at that percentage level, that is where price has begun to fall. So the anticipation as a forex trader is that this price should even fall deeper. And now there is something shocking about Fibonacci that a lot of you never knew about, and which I haven't actually seen anybody teach that, but I always use it as an advantage when trading with the Fibonacci. Can you see this line? Can you see this red line? This red line is the Fibonacci red line. If I go back to the 4-hour time frame, you can see this red line, right? This is the Fibonacci line. Okay, now this line is not just here for fancy, guys. This line, no one has ever, I've not seen anyone who has ever taught this, but it's one thing that I have observed so much, and it works. This line is also another confluence, apart from the 50% and 61% of the Fibonacci. This line also serves as a trend line. Checking Fibonacci for a bearish market, this line is serving as a trend line for a bearish market. If you go to the 15-minute time frame, you would observe something. In the 15-minute time frame, you would observe that after market turned from the 50% Fibonacci level, price trying to go back to the upside is having rejection as a resistance from this line. So I have observed it most of the time that you would see price play around, come back, hit this line again, and fall again, meaning that this line is also here to serve as a trend line. All right, when price came down, it's rejected and hit at this line, went down, and let's go further. Let's have it. You can see when price came here, you can see the rejection on the line again going down. So that tells you that the Fibonacci has two different tools you can always work with. All right, so now like I told you guys, I'm gonna have to pause the video based on the analysis that I've just made with this Fibonacci, and so that we can come back later and see if price indeed falls according to this analysis. So right now price is at this percentage level, 50%, and the anticipation is that it should fall, and if anything happens for it to go back to the upside, it has to stop here and fall deeper. So we're going to come back and check that out. Don't forget guys, if you're here in the Bullish Bear FX channel for the very first time, you can do me a little favor by hitting that subscribe button, because all I do here is nothing else but give you guys strategies and ideas and tips to make money in the forex market. And the bell, turn on the notification bell that comes out of it and put it on all notification, because that bell will help you to get notified instantly anytime I release a new video. And it's very important that you should get notified anytime I release a new video, because you never can tell when I'm going to release a video that is having a giveaway inside of it and you don't want to miss it. So this also refers to those of you who have actually subscribed and who have been following me for even a long time, but you only subscribe or you didn't turn the notification bell on. So turn the notification bell on. All right, so for a bullish movement, it is also the same thing just for a bearish. Remember, for a bearish, you will have to start from the top and drag your Fibonacci down. So for a bullish movement, you will have to start from down and drag your Fibonacci up in order for you to know where will this retracement end before the next bullish move. Understood? So let's have a little example. I'm going to place it here and drag it up to this place where the move ended. Now watch this guys. After putting my Fibonacci and dragging it up to where the move ended, what do we see at the pullback? Where did price stop? Price stopped exactly at 50%. And what? Boom, the next bullish move began. So since this is the boom 1000 market, for this movement is you catching a lot of spikes. You can imagine the amount of spikes that you could have caught using the Fibonacci. So that's just very simple. The same way you use it for a bearish market is the same vice versa you use for a bullish market. The only difference is a bearish market, you start dragging from up to down. But for a bullish market, you drag from down to the top. Understood? Please use the comment section. Let's be friendly guys on the comment section, because I'm making this video based on the fact that someone asked for it, and that's why I'm using it to teach you something new. So let's be friendly, let's mingle together, let's share ideas on the comment section, and it's going to give me idea of what my viewers are looking for, and I will create videos based on it to teach you guys more and more. And then finally, I told you guys that I was going to teach you something concerning when price crosses the 61.8 and go into the 100%. Now it's very simple. If price crosses 61.8% and continuously coming down, don't trade it unless you have other confluences that can give you the confidence to place a new trade that is beyond the 61.8. all right, but if you're using only the Fibonacci, all right, if price crosses the 61.8, just allow it to keep going, and hopefully if it gets to 100%, then you can look for another entry. Why do I say look for another entry at 100%? Because it's very simple. If price failed to stop here or even stop here, if price failed to stop here at 50% or even stop at 61.8%, coming straight down to 100%, that means price is about to create a double bottom chart pattern, of which here will be the first bottom and here would then be the second bottom, and then that's where you see a bullish move. What is, I'm asking this as a question, I know a lot of you know it, but I want to get you engaged on the comment section. So my question is, what move comes after a double bottom? I've asked you guys 2 or 3 questions right now, right? I want to see those who will engage well on the comment section with all the questions I've asked you. So now I'm going to pause this video and let's observe how market will move on my bearish Fibonacci as anticipated. Oh no, my chart now looks like a Fibonacci blackboard. So guys, you're welcome back to the video. So I paused it and it's about 2 hours past now. So let us look and see if price indeed played according to our analysis of the Fibonacci. So I'm going to have to zoom in, and you can see. So what do you see now, guys? Price respected the exact 50% Fibonacci and indeed has been falling to the downside. And this is the 4-hour time frame. So imagine if I had placed that sell when price was still here, it would have been a sniper entry and indeed should have been a massive profit. You would know it's a massive profit if we go to the 1 hour or the 30-minute time frame, so you can see how long it is. Can you imagine selling all the way from here down to here? I should have made closely to $500. So that is one thing you need to understand when it comes to trading. You need to understand the principles, have your strategy, use your strategy confidently. And most times your strategy might not work out, but that does not mean your strategy is fake. But the only thing is the consistency. Whenever you lose in a trade, check out why did you lose? What did you do wrong? What did you not check well? This is how you improve yourself and improve your strategy.